I'm looking at you with one eye because I know that you're thinking of starting to trade futures. Because your airdrops are not doing so well, isn't it? I understand. And so many people are experiencing the same thing. Airdrops have become shitty. Projects are just airdropping dots to their users. And that's why, you see, this Web3 space, there are so many other things you can do. And I don't blame you for thinking about trading futures. The only thing I'm just going to say is, there are some things you need to know. You need to equip yourself with knowledge before you start. So, in my own little way, as my own service to humanity, I'm going to be giving you 5 things that you need to know before you venture into futures trading. Because let me not lie to you, futures trading can send you to the village. So please, equip yourself first and make sure you watch this video from beginning to end. Now, let's go to the real deal. We are talking about futures trading. What exactly is futures trading? Futures trading is as simple as leverage trading. And leverage is, how do I say this now? Leverage is you borrowing money that you do not have to trade. So let's say, for example, you have $1 and then you go to a platform, let's say Binance, for example, and you go on Binance with your $1 and you say, Binance, borrow me. In addition to this $1, extend this $1 for me and help me open a position on so and so trade. So if you want to predict that a particular coin or a particular token is going to either go up or down, you then borrow money from that platform, from that exchange, and use it to place a bet. Futures trading is like placing a bet. However, it is not just any kind of bet. It can be a calculated bet. It can be a calculated risk. There are so many traders. There are so many traders who lose their funds, and there are so many who make good profit. The only difference between those who lose all their money and those who make profit is what they have up here. So watch this video from beginning to end, as I'm going to be sharing you 5 tips on how to trade futures properly. Number 1, the first thing you need to know is about market volatility. You'll be wondering what volatility is. Volatility is simply up, down, up, down. The way prices go up and down. Now, you need this volatility to make profit. If you're predicting that Bitcoin is going to get from $6,000 to $107,000, it needs to move for it to get there. And if you are predicting that it's going to go lower, it needs to move for it to get there. And that is the most beautiful thing about the market. The market does not stay in one place. It is always going up and down. Always going up and down. There is always a pattern. And you need that movement, up, down movement, to make profit. So when the market is moving, going up and coming down, you are either making money or losing it. You will not lose money. The second thing you need to know is about leverage. Leverage, like I said earlier, is just simply borrowing money that you do not have in order to place a trade. So if you have $10 and you open a position on 10x, it means that 10 times 10, that's 100. So you're placing that position, you're trading with $100. If you use 5x, you're trading with $50. That's just the simple thing that leverage is. So the thing about leverage now is that as you are trading with, let's say you've placed a trade, you've used your $10 on a 10x leverage. Now as you have placed that trade, used that $100 for the trade, if the trade should go in your favor, you are going to be making profit on that $100. But guess what? Boo! If it should go against you, you are losing money on that $100. So the trade just needs to go maybe minus 10% for you to get liquidated. To be liquidated means that the money is poof in the air, nothing, gone. So just as a beginner, one thing you need to be conscious of is that just try as much as possible to use maximum 10x leverage. Don't use over that. Don't use beyond that. If you go and follow people and start using 50x, 100x, 200x, village, your money is gone in the blink of an eye. In fact, it might not even take a minute for the entire account to be wiped off. So please and please and please, if you know you don't want to go back to the village, do not use high leverage. Stick to lower leverage. Now the third thing. So many people are usually not conscious of funding rates. Now, when you open your futures of derivatives, you're going to notice something at the top of your account. It is going to be showing funding fee. On some platforms, it is funding fee, some funding rates or trading fee. Whatever it is, they all mean the same thing. It might be, at some point, it might be 0.01%, depending on the token you are trading. You may either be given, the exchange you're trading on may be giving you funding fee. Some people would have plus 0.1% per maybe 8 hours or 4 hours, depending on how long you stay in the trade. Some people's own will be minus. So whenever you are placing a trade, when you pick your token that you want to trade, be conscious of that funding fee, because there is a tendency that if you are not conscious of it, the profit you are even going to make on the trade, the funding fee would have eaten most of the profit. So what's the point? So please take note of your funding fee and don't just go blindly into any trade. Number four, analysis. Your fundamental analysis, your technical analysis. Now, fundamental analysis is just basic. Let's say like your news, you heard the news that Trump is going to be hosting a dinner with all the holders of Trump coin. Automatically you should know that Trump coin is going to skyrocket. So you do not short that coin at that point. So those are indicators. You listen to news, world events. When when MicroStrategy or a big company invests into Bitcoin, there is a tendency that it would go up. And when there is negative news about Bitcoin, or when there is negative news, it would affect the price and it would come down. Those are basic fundamental tools that you can use. Your news, don't joke with it if you want to succeed as a futures trader. Do not joke with it. The other thing you need to know is your technical analysis. Now, don't allow anybody make it all look like jargons to you. It's not difficult. The only things you need to know, or should I say the most basic things you need to know to profit, is your candlestick pattern, support and resistance, and that's it. If you know your candlestick patterns and you can say that this candle at this point is looking bearish, is looking bullish, you are good to go. If you can say that RSI, to check if you can know the RSI, and that RSI is very simple. That RSI indicator is going to show you at the point where a coin is overbought, at the point where it is oversold. It's just all the tools you need, they are there at your disposal. If you go and buy a coin that is already oversold, it is already oversold according to the indicator, and you are shorting it, you are shooting yourself in the leg, because what would happen? At the point where a coin is oversold, it is expected to go up. At the point where it is overbought, it is expected to come down. So you do not then go and see that a coin is already at 92% on the RSI indicator and you are still longing it. Longing it to where? Where is it going to heaven? You may have a streak of luck and it may happen like that if there is some market manipulation going on. But then you may lose every single thing. So please and please be conscious of your fundamental indicators and your technical indicators. And last but not least, risk management. See, the best traders are those traders who live to trade another day. Whether you like it or not, you will not be profitable every day. So the only thing you can do for yourself is to manage your risks properly. Don't trade more than 5% of your portfolio at a time. Because if you trade 100% of your portfolio and everything goes off, you get liquidated, how do you place another trade? It's impossible. But when you trade 5%, if the market does not go in your favor or it goes in another direction, you have the remaining 95% to try again. So if you keep trying, and the more you try, the better you become at it. You that lost 5% today, tomorrow you may gain 5%, or even if you lose it, you're adding to your experience, you are learning, but you are not using all your money to learn. You are still having some backup plan that you can still use to relearn and relearn until you become a perfect trader. So, as a recap, be conscious of market volatility, be conscious of your fundamental analysis, conscious of your leverage side, don't use high leverage. Your funding fee, your funding rate, take note of it, and manage your money very well. That is the biggest alpha you can get on crypto trading. Manage your risk. Don't say you were not told. I told you. I wish you all a successful trading journey. If you like this video, please make sure you like, you subscribe, you follow, because I will continue to share more tips that you would find useful. Thank you very much for listening. Bye bye.